Hello everyone and welcome to Onchain update for the 2nd of May. So what we're going to be looking at today is whether the recent Bitcoin rally reached a degree of overheated status. We're kind of tussling around this 30,000 level. I still find it quite remarkable that we're holding this kind of $27,000 to $30,000 realm. To be honest, it still looks like an uptrend to me, and my macro bias still does tend to remain to the upside. But what I want to do is just kind of go over a bunch of different metrics, have a look particularly from the short-term holder cohort. Really going to zoom into those because they're really the ones driving this, right? When the long-term holders, really we're talking about last cycle buyers. A lot of them are hardcore weathered folks who are going to stick around rain, hail, or shine. And the rest is just relatively small in terms of the amount of spending that's going on. Now, if you are wondering why there is a molten lava cake on the PNG, it's because I'll generally just type in, overheated, and overheated turned into molten, molten turned into lava, and I couldn't find a picture of any molten lava, so we just found a lava cake. Anyway, that's the logic behind the madness. So getting stuck into it, and as I mentioned, we are going to be focusing on the short-term holder cohort. They are basically those who acquired their coins in the last 5 months. We're a little bit beyond the perfect symmetry of pre and post FTX, but nevertheless, we're pretty much looking at people who have been kind of 2023, or let's say December onwards. So starting with their overall cost basis. So what we saw is that the short-term holder cost basis here in red declined quite significantly below all of the previous cost bases. Now, when we see this is typically bottom formation behavior, and this deep dive of short-term holder shows there's been a capitulation. All the old hands have flushed out their coins, and the short-term holders become the bottom buyers. Now you can see that they are starting to push up above our current level. Let's zoom this right in on, say, a 2-year basis. We now have the short-term holder cost basis above both long-term and the average market, which is the normal state of affairs. This is how you kind of want things to be, because you want the guy who came into the market yesterday to be in a slightly worse position than the people who've been here for 6 months and gone through all the pain. Now, in terms of a price level, 24,300, 24,500, that kind of realm. Note the strong pullback we had here at 19.8, perfect retest of the short-term holder cost basis. And this is something that we do tend to see through bullish markets. We tend to see the short-term holder cost basis acts as a degree of support. So in my view, that 24,500, maybe with a bit of front running, maybe with a bit of an undercut, if we were going to get a more sustained pullback, that would be an area that I personally would become a little bit more interested. Now, this is a cool chart that my colleague developed, basically looking at the 7-day change of those cost bases, right? Now, to think about this, if your cost basis, if the realized price is climbing significantly, it means a lot of people are chasing the price. If it's declining significantly, it means a lot of people are dumping at lower prices. Coins are being revalued lower. So it's a nice way to kind of track the overall sentiment and movement and how things get a little bit hyped. Now, you'll also note here's March 2020. In the recovery, we had a very strong uplift. We had a very strong uplift before the bull. We had it at the all-time high. This level here is about 4%, meaning that the realized price grew at 4% per 7 days or per week. Now, we butt our head up against this for a number of times on the short-term holder instance. Now, this looks a little bit like the early days back here. Note that the realized price and even the long-term holder, that'll come later, but the orange one here really hasn't shown up much. The realized price is fairly static, which really shows that most of the activity is happening in these shorter term holders. We saw this in 2018. We saw this in the pre-2020, and it's really the full bull where the whole market starts to really respond. And this is basically, this orange following is when you get a large amount of distribution from the old hands. So we are very much in a short-term holder dominated market, which is why we're focusing on this particular cohort. Now, this chart is the MVRV. For short-term holders, we're literally looking at the profit-loss multiple. This green and red line you can see through the center here is mapping out break-even. Now, remember, this is the unrealized profit and loss. How much profit and loss are they in? Red in this instance just happens to be in loss because it's obviously you start getting closer to sell side. Now, interestingly, we've got a 1.2 level, a 1.4 level, a 1.6 level. These are essentially the short-term holders are in 20%, 40%, 60% profit, or 20% loss and 60% loss. Now, for whatever reason, this metric seems to respond quite nicely and quite beautifully, actually, to these particular levels. You can see back here in 2018, this kind of 1.2, so 20% profit, has been a point when you start to expect some sell side. We saw it here in the first rally, and we got a nice break. Here's that beautiful retest of the break-even point here at 1. Exactly what you want to see. We didn't quite get up to 40% profit, but we're kind of correcting in that same zone. Now, note that we are currently breaking below that level. It gives me a bit of a feel that I would not be surprised to see us come back down to that $24,000, $25,000 level and potentially even get another retest. I mean, you can see what we did back here in September 2021. So I wouldn't be mad at seeing us come back and actually retest that break-even level. It isn't my base case. I do think that on the macro scale, we probably are going to head higher, but also a bit of a shakeout here actually wouldn't go too far. So that's just something to keep in mind. Now, similar style of metric. This one here is the profit to loss. So basically, we're looking at, let's take all the short-term holder coins, take all the ones that are in profit, work out how much they're in profit, and then take all the ones in loss, how much they're in loss, take a ratio. Now, this thing here, whereas the MVRV is operating in linear scale, right? You'll see on the axis here, it's going between 0.9, 1, 1.2, 1.5. This here, we're talking about log scale, because if you imagine this, if you've got a ratio where you've got 50% in profit or loss, then your ratio is 1. But as you go from 60% to 40 or 70-30, the ratio goes exponential, right? When you get to 99-1, you're not talking about, 1.2, 1.4, you're talking about 99. So this thing goes exponential. And what it will also do is account a little bit better for the, essentially, when is everybody in the green and when is everybody in the loss? Now, you can also see that we came up and retested this top level here, which is 95%. This top gray line is where 95% of short-term holders are in profit. And you can see that 2019, good example, this was a micro correction that we had back here. They all got into profit. Obviously, the bull market, the all-time high, and we've had a couple of instances. So it really shouldn't be too much of a surprise. It's basically everyone went into the green. So to get a bit of a correction there, it kind of makes sense. And at the same time, we're also going to get this that same break-even level come back into the mix. So overall, I'm not really too surprised. We've had a bit of a correction, and in many ways, I kind of feel like we could have another one. This metric also, just note, we've had 1, 2, 3 spikes above. The 2019, something on the similar order, even the bull market. We're not talking about something that's too different. So therefore, if we did get a second leg higher, I actually also wouldn't be surprised if we came back and retested this level. So in any case, for me personally, as a spot hodler, I won't be chasing anything above here, but I certainly get more interested as we come back down to lower prices. That I am expecting the bounce, but I'm also not particularly interested in chasing this thing higher at this point in time, just given some of these signals that I'm kind of seeing, getting into that unlikely to continue type regime. On the realized profit front, right? So that was all unrealized, right? What is the profit and loss held within this cohort? We can then also look at what are they actually doing? Are they actually puking out coins? Are they taking profits? And you can see that on SOPR, they are taking profits on these rallies higher. And it has been a period of substantial green, right? Now, on these retests lower, we do get these negative prints. By the way, this here, the red and green, is SOPR, just plotted inverted. So everything, if it's red, it's below 1. If it's green, it's above 1. So you can kind of see that these match up. But anyway, you can see that we get these nice bounces down below. So this is showing that people are actually selling below their cost basis. And remember, in order to be below your cost basis on either of these rallies, you essentially have to have bought the top. So these undercuts are actually very healthy, and it is what you want to see. You can see that we're currently there. But given what we saw above with the unrealized component, it kind of tells me there's a bit more potential energy in the system. This is the kinetic energy. It's actually the stuff that's being flushed out. These nice waterfalls are good, particularly on short-term holder. You do actually want to flush out the top buyers. Now, we've got a bit of an undercut. Give me a real undercut. Give me something that's got a bit of pizzazz. One of these kind of levels that really takes it down and then recovers. So right now, in terms of the realized loss, We've got the right signal, the right direction, but not the right magnitude just yet to kind of indicate that we've had a proper flush out. So I'm also just a little bit cautious and, just hoping to get a bit more of a flush out than what we've currently had. Now, we've talked about this in the past. Let me just remind you what we're looking at here. We're looking at SOPR of two different variants, short-term and entity adjusted. But we're looking at SOPR relative to funding rates being in the orange, right, for futures markets. And we've talked about how clearly these patterns are quite similar. We've had a period of profit taking, but we also we've got positive funding rates, but they're not gangbusters. So my big takeaway here is that we're kind of it feels very early bull market territory. I don't see irrational exuberance. I don't see complete madness, long the farm, bet the farm. It's actually quite controlled in my view. Now, is it getting a little bit illiquid? Yes, absolutely. We saw that in many of the wicks that played out this week. We're certainly in an illiquid market. We're in there is just less trading capital floating around, but we're also not giga moon boy level, right? Everybody's going super long on leverage. It's still quite healthy in my view, but it leads to a bit of volatility, right? So the market is net long on the bias. Therefore, a bit of a correction I think would be healthy to flush people out. I don't know if we'll get it, but that's kind of my gut feel at this point. And that pretty much sums it up. So in terms of looking at these short-term holders, I think, we've looked at it from the unrealized component, which kind of tells me that there's probably a bit of momentum. I wouldn't be surprised if we got a bit of a flush out in this particular instance. At the moment, nothing really looks like it's going to structurally damage the uptrend that's currently in play. So overall, I'm actually not too mad about this. And actually, before we do close off, let me just grab one dashboard. Let me just boot this thing up. The one that I want to look at is price performance. I recently shipped a couple of extra charts today, which I think will be quite useful. These ones here we are. So there's two I want to look at. One is, let's assume we're in a bull market. And in a bull market, we know, well, in any market, but in a bull market, we know it's not up in a straight line. You get corrections along the way. Likewise, in a bear market, you get bullish rallies. You get, and they're generally quite powerful. So what I wanted to do is kind of compare our current in both bull and bear. So over here is our little, tiny little market cycle that we've had so far, assuming that FTX was the bottom. These are our bull market corrections. Now, just visually, the black's pretty weak, right? So we haven't really had a kind of gut-wrenching sell-off yet. I don't know if that's coming now or if to be honest, if we got up into like the, 40,000, give me a correction down to 24. That's going to really juice things up. That'd be fantastic, to be honest. But you can see that the scale of this is just, it's peanuts, right? Compared to what we had over here. This is 10%, by the way. This here is 23.6. So we haven't even had a 23% correction yet. So it's still pretty piddly. Now, the other one is, let's assume that we're still in a bear market, right? Let's give the bears their dues. Although you can see that, our current market cycle, it's got a lot of 2015-ness to it. The thing that stands out to me here is, note that during the bear market rallies, they start very powerful. The bull's back. Oh, no, it's not. Oh, it's back. Oh, it's not. Oh, yeah, bull market's back. And then eventually just go, oh, I'm done. And you capitulate. So you can see that the decline, the actual scale of how much the bull market fever of each of the recoveries diminishes over time. But then note that the exit to the bear is a really powerful move. The exit to the bear is a really powerful move, right? And I've actually curtailed these, by the way, because otherwise the chart gets ridiculous. I've chopped it off when it gets to 100% for each cycle or thereabouts. You can see that the black here, man, does it look like 2019? Does it look like 2018 or 2020 here? Does it look like we've had that gusto moment that kind of slays the bear? It really does. So that's just kind of a bit of a takeaway. So my gut feel is that it feels like we have a lot of the conditions for a bull market. A upswing, I would not be chasing because it just feels like we've had enough overheated days. wouldn't surprise me to get a bit of a correction. And to date, our corrections have been pretty mediocre at best. So, something that's going to give the bulls something, take it away, give the bears something, take it away, right? Bit of chop, bit of sideways, bit of reaccumulation. All of this feels very, very natural and very, very healthy. Anyway, let me know if you've got any questions. Hopefully that's a useful session, and I'll see you in the next one. Cheers.